Hey guys, this Crypto she does it all, a little bit of everything. Lately, we have heard a lot about CBDC, and I am here to bring you the latest, anything about crypto, anything that I feel like we should know about. I will do my research and bring it to you. So I thought it was important to Google and find out what is CBDC and what are they job? What is it about? Okay, so CBDC, central bank digital currency, is a digital form of central bank money that offers central bank unique advantages at the retail and wholesale levels, including increased financial access for individual customers and a more efficient infrastructure for interbank settlements. Okay, let me go a little bit deeper. So, like I said, guys, I am here to bring you everything. It's not only about crypto, anything that I find interested and important. I'm gonna do my research and bring it to you. So it's up to you guys to subscribe. Give me the like, and I can have more subscribers and be able to do this full time. Yes. What is a central bank digital currency, CBDC? Central bank digital currencies are a form of digital currency that is issued by a country's central bank. They are similar to cryptocurrencies, except their value is fixed by the central bank and equivalent to the country's fiat currency. Many countries are developing CBDCs, and some have even implemented them. Because so many countries are researching ways to transition to digital currencies, it's important to understand what they are and what they mean for society. That's why I have to bring it to you guys. Key takeaway: a central bank digital currency is a digital form of a country's fiat currency. A CBDC is issued and regulated by a national's monetary authority or central bank. CBDCs promote financial inclusion and simplify the implementation of monetary and fiscal policy. As a centralized form of currency, they may not anonymize transactions as some cryptocurrencies do. Many countries are exploring how CBDCs will affect their economy's existing financial network and stability. Understanding central bank digital currencies, CBDCs, fiat money is a government issued currency that is not backed by a physical commodity like gold or silver. It is considered a form of legal tender that can be used to exchange goods and services. Traditional fiat money came in the form of banknotes and coins, but technology has allowed governments and financial institutions to supplement physical fiat money with a credit-based model in which balance and transactions are recorded digitally. Why I'm laughing as I am reading this? Commodity is a word Michael Saylor loved to put on top of Bitcoin. And whenever I can remember watching the tape from Altcoin Daily that Michael regretted putting so much money and Bitcoin, he's waiting for a break even to sell everything and put all the fund on Ethereum. It makes me laugh hearing his voice. It was him, y'all. Somebody trying to tell me it was not Michael Saylor. It was Michael Saylor, and it brings joy to my heart. Hearing him suffering in pain. He has to buy some punji penguins to ease the pain, to feel better. That was Michael Saylor. I don't care what people say. Let me continue with the subject. Physical currency is still widely exchanged and accepted. However, some developed countries have experienced a significant decrease in its use, and that trend accelerated during COVID-19 pandemic. The introduction and evolution of cryptocurrency and blockchain technology have created further interest in cashless societies and digital currencies, though government and central bank worldwide are exploring the possibility of using government-based digital currencies when and if they are implemented. These currencies would have the full faith and backing of the government that issued them, just like fiat money. And that's what they are afraid of, yeah. They are afraid that crypto is going to take over. Crypto is the easiest way of dealing with digital currencies. The credit card, the checks, and everything else are all timing. There is no third party. This is peer to peer. What's so bad about that? You know, to regulate that and make it easier for all Americans to do so. Why Gensler having a problem with that? Why Gary Gensler refused to regulate crypto? You know, it's ridiculous. They are putting so much. they don't want to go with it because they know it's gonna change a lot of middle class life. We're going to be financially stable. And again, they have to realize it is too late. We are on our way. Enough is enough. Just go with the regulation. Go with the legal term. Make it right on the American people's eyes. Let us do whatever hell we choose to do with our money. And you can get paid. You can get your tax from it. And keep it moving. Why are you making it so hard? Goals of central bank digital currencies in the US and many other countries, many people do not have access to financial services. In the US alone, 5% of the adults do not have a bank account. An additional 13% of the US adults have bank account but use expensive alternative services like money orders, payday loans, and check cashing services. It's true. The main goal of CBDC is to provide businesses and consumers with privacy, transferability, convenience, accessibility, and financial security. Exactly. This is what we need. This is what we want. Give the people what they want. Give the people what they need. CBDCs could also decrease the maintenance. Exactly. A complex financial system required reduce cross-border transaction costs and provide those who currently use alternative money transfer method with low-cost options. This is exactly what the banking system are afraid of. Using cryptocurrency, the billions they are making daily on overdraft fees, on unnecessary fees, late charge fees is not going to happen anymore. Or this $1 billion they are making of the poor, because only the poor pay late on their mortgages, on their car payment, and their bills. It's not going to happen anymore because crypto gonna take care of that. So they are afraid crypto will stop the 1%, the banking, the institutional financial system from making that money from us. That's why they are afraid. Okay, important note, a CBDC also provides a country's central bank with the means to implement monetary policies to provide stability, control growth, and influence inflation. You see that? Central bank digital currencies would also reduce the risk of using digital currencies. In their current form, cryptocurrencies are highly volatile, with their value constantly fluctuating. This volatility could cause severe financial stress in many households and affect the overall stability of an economy. CBDCs, backed by a government and controlled by a central bank, would provide household, consumers, and businesses with a stable means of exchanging digital currency. That's what they're afraid of, man. I know there was a lot of risk there, but let us take the risk, you know. Let's make it better, you know. Regulate the damn thing. Okay, type of CBDCs. There are two types of CBDCs, wholesale and retail. Wholesale CBDCs are primarily used by financial institutions. Retail CBDCs are used by consumers and businesses, much like physical form of currency. Wholesale CBDCs are similar to holding reserves in a central bank. The central bank grants an institution an account to deposit funds or used to settle interbank transfers. Central banks can then use monetary policy tools such as reserve requirements or interest on reserve balance to influence lending and set interest rate. Retail CBDCs are government-backed digital currencies used by consumers and businesses. Retail CBDCs eliminate intermediary risk, the risk that private digital currency issued might become bankrupt and lose customers' assets. There are two types of retail. Jesus, it's a lot, guys. Okay, let me see if I can finish this. There are two types of retail CBDCs. They differ in how individuals users access and use their currency. Token-based retail CBDCs are accessible with private/public keys. This method of validation allows users to execute transactions anonymously. Account-based retail CBDCs require digital identification to access an account, which is great. Important key to take: two types of CBDCs, wholesale and retail, are not mutually exclusive. It is possible to develop both and have them function in the same economy. Issues CBDCs address and create. The Federal Reserve have published a report on what is believed are critical issues a CBDC meets and issues that need to be addressed before one can be successfully successful design and implemented. Issues addresses by CBDCs: free from credit and liquidity risks, cross-border payment improvements, support the international role of the dollar, financial inclusion, expands access to the general public. Issues that need addressing: financial structure changes, financial system stability, monetary policy influence, privacy and protection, cybersecurity. I understand. Everywhere there is risk. Issues a CBDCs address explain. A CBDC eliminates the third-party risk of an events like bank failures or runs. Any residual risks that remain in the system risk with the central bank. High cross-border transaction costs, it's true, can be lowered by reducing the complex distribution system and increasing jurisdictional cooperation between governments. The dollar is still the most used currency in the world. A USC BDC could support and preserve its dominant position, removes the cost of implementing financial structures within a country to bring financial access to the unbanked population. CBDCs can establish direct connection between consumers and central banks, thus eliminating the need for expensive infrastructures. Of course, the bank don't want that. That's how they make their billions every day on overdraft fees, on late payment. Of course, they don't want that easy access for the consumers. Issues a CBDC creates explain. The financial structures of the U.S. could drastically change. How a change would affect household expenses, investment, banking reserves, interest rate, the financial service sector, or the economy is unknown. The effects a switch to CBDC would have on a financial system stability are unknown. For example, there may not be enough central bank liquidity to facilitate withdrawals during a financial crisis. Central banks implement monetary policy to influence inflation, interest rate, lending, and spending, which in turn affects employment rates central banks will need to ensure they have the tools they need to positively influence the economy. Privacy is one of the most significant drivers behind cryptocurrencies. CBDCs would require an appropriate amount of intrusion by authorities to monitor for financial crimes. Monitoring is also important because it supports efforts to combat money laundering and the financial of the terrorists. As has been witnessed on several occasions, cryptocurrencies have been the target of hackers and thieves. A central bank issued digital currency would likely attract the same crowd of thieves, so efforts to prevent system penetration and theft of assets and inflation would need to be significant. Again, this can happen in any sectors. Even now, put your money in the bank is not the safest place. Okay, so give me a break. God, I'm gonna try to finish this really soon. CBDC versus cryptocurrency. The cryptocurrency ecosystems provide a glimpse of an alternate currency system in which cumbersome regulation to do not dictate the terms of each transaction. They are hard to duplicate or counterfeited and are secured by consensus mechanisms that prevent tampering. Central bank digital currencies are designed to be similar to cryptocurrencies, but they may not require blockchain technology or consensus mechanisms. Additional cryptocurrencies are unregulated and decentralized. Their value is dictated by investors' sentiments, usage, and user interests. They are volatile assets more suited for speculation, which make them unlikely candidate for use in financial system that requires stability. CBDC mirror the value of fiat currency and are designed for stability and safety. Again, they need to regulate it and things will change. Let's see what happens. Central bank digital currencies at a glance. Many central banks have pilot programs and research projects intending to determine the viability and usability of a CBDC in the economy. As of March 2022, there were 9 countries in the territories that had launched CBDCs. Okay, the Bahamas, Antigua and Barbuda, St. Kitts and Nevis, Montserrat, Dominica, St. Lucia, St. Vincent, and the Grenadines, Grenadinenser, Grenada, and Nigeria. Those people have tried it and I'm sure it's working just fine. I'm gonna close it there. There is more things to come. It's just too much. The video will be too long. Yeah, again, what is CBDC? I wanted to give you an overview. What is it about? How can it change our lives? May God bless you and let me know how you feel about it and subscribe. Bye.